Ladies and gentlemen, good evening. Christopher Aaron here. It is March 21st, 2018. I hope you are well. Thank you for tuning into this broadcast. This was a key day in the financial markets. Let's take a look at what happened. The most important thing today was the Federal Reserve meeting. The Fed decided to raise interest rates. This was the sixth interest rate increase of the present cycle, which began in December of 2015. So let us take a look at how this has impacted the precious metals and talk about a few of these trends that are unfolding in front of our eyes right now. Because if you were listening to the mainstream media about this, you would have gotten this trend completely 100% wrong for the last 2.5 years. So let's look at what the actual data shows. Let's take a look at this meeting. This was the first meeting by the new Fed governor, Jerome Powell. This was Trump's choice to replace Janet Yellen. And by all means, it seems as though, at least in his public face, he is a fairly reasoned individual. He seems to be keeping most of the same policies thus far intact as Miss Yellen was implementing in her tenure. There was not that much that was earth-shaking in the meeting today. There were a few lines that I picked up listening to the broadcast after the official decision that I want to bring to your attention. These were the important ones, as Jerome Powell said. So we want to have inflation at a 2% longer run goal. Now, just remember, this is a new policy. This has only been implemented for about the last 5 years or so. Prior to that, the Fed never officially stated that they wanted a 2% inflation goal. They merely said that we want price stability. And I would tell you, so if prices are rising 2% every year compounded, this is not price stability. This is consistently rising prices. Furthermore, we want to avoid inflation persistently below our objective. So in other words, no inflation, in other words, stable prices, is now to be avoided. So these are important changes in the language of the Fed that we're seeing here just over the last few years. Once again, we've never seen this type of rhetoric. If you go back 10, 15 years, even to the time of Alan Greenspan, yes, who printed so much money, he never stated things like this. So this is a big change. And let's just rewind in history. So if this is the official goal right now, 2% inflation, is this normal? Should we actually want this? Is this healthy? Well, let's look at the Consumer Price Index for the United States. This is a doozy of a chart. I love this one. Going back to the founding of this country, we are looking at a basket of goods priced over time in US dollars. And what can we see here is that from the founding of this country through the founding of the Federal Reserve, this line right here, prices stayed almost stable as a net sum for, what is this here, over 130 years. So this idea that there needs to be this 2% level of inflation for a healthy economy, this is just false. Consider all of the incredible inventions that came to fruition during a period of low overall inflation. I mean, first, let's talk about it. The founding of this country. Let's talk about the Manifest Destiny conquering the western shores of North America, the settling of the frontiers. Let's talk about the railroads, the invention of the steam engine, the transcontinental railroads. Let's talk about electricity, for crying out loud. Let's talk about the telephone, the telegraph, the automobile, the airplane, all invented during a time of no inflation. So the idea that there needs to be this level of inflation for a productive economy, it's just flat out false. When has there been inflation throughout the history of this country? It's very clear to see here on this chart. We can see that consistently wars have marked periods of high inflation. And these look like minor bumps here, but the inflation rates in this time from a CPI of, for example, from a CPI of 1 to a CPI of 2.5 or 3, You're talking over a doubling of prices, over 100% rate of inflation in these little squiggles here over just a couple of years. We can see the World War I, World War II bump ups in inflation. Key takeaway here is that war tends to be the most inflationary event that humankind knows. Even more inflationary than the bailouts of the banks or the bail-ins of the banks or printing for social programs or welfare. War is the only source of inflation that both siphons productivity off from the general population while simultaneously destroying the productivity of those that the war is targeted against. War is thus the only double negative form of inflation in the world if you really stop and think about it. We take human beings' productivity, they could be going toward building roads, bridges, schools, invention, science, healthcare, and instead we take these people and we have them build bombs. And then what do we do with the bombs? We blow them up on the other side of the planet and destroy other people's productivity. War is the only double negative form of inflation in the world, and take it from me, I have seen it with my own eyes. I did spend a year in Iraq and Afghanistan from 2006 to 2009. This was a huge part of the reason that I decided to leave that world. Even though it was financially lucrative for me, I decided to leave it because I no longer believed in wanting to align my life with a double negative form of inflation for the world. So what time do we live in right now if we look at this inflation that the Fed is talking about? I mean, look at this. As if this is anything normal. This level of inflation. I mean, far surpassing the greatest military conflicts of human history. So, of course, we have after 1971, when the dollar was officially removed from the gold standard by President Nixon. And what have we been in basically after World War II, Korean War, Vietnam War, Iraq, Kosovo, Somalia, Iraq II, Afghanistan. In perpetuity, we can call this perpetual war. This is something that I speak about quite often in other forums. I am active in some veterans forums and some peace forums. And this draws some negative attention from those who do not support peace, but that's fine. But I believe firmly that we live in this time of perpetual war, in addition to the bailouts, in addition to the inflation that the central bank prints for its own member institutions. All of these things combined have caused this level of inflation that we perceive as normal. This is anything but normal in the broad stroke of history. And if there's one quote that seems especially pertinent right now, it's this wonderful one by George Orwell, courtesy of Collective Evolution. Thank you. The war is not meant to be won, it is meant to be continuous. Hierarchical society is only possible on the basis of poverty and ignorance. The war is waged by the ruling group against its own subjects, and its object is not the victory. The object is what? To keep the very structure of society intact. Thank you, Mr. Orwell. Bottom line is we're living through this war and central bank induced period of inflation right now. This is not normal, but it seems normal to us. Let's move right along. Let's move into the charts. That's just a little bit of a background about the unprecedented situation that we are living through right now. And I know I use that phrase sometimes, unprecedented, but it truly is. When you look at that inflation chart, there is nothing other than we can say than this has never happened before on a sustained basis, right? It happened in short-term periods. You know, the Civil War, the greenback was severely devalued. The continental currency during the American Revolution was severely devalued, but never on a sustained, perpetual basis like this. So let's look at gold. Here's gold over the cycle of Fed interest rate hikes. And let's look, these pink arrows are going to show where have all the Fed interest rate hikes occurred. The first one, December 2015, and we'll show the exact price that gold was at that time. The second one, Interesting little pattern developing here, right? Major low, Fed rate hike. The mainstream media tells you rate hikes are supposed to be negative for gold. Why are we seeing rate hikes and then boom, gold is shooting higher after every Fed rate hike? Why is this happening? Third one, very interesting again. Boom, $100 move right starting at the Fed rate hike. Now the fourth was the single anomaly that we have thus far. Gold moved down first and then continued higher. This was when the Fed discussed balance sheet normalization, to put that term into quotes. A topic for another day. Suffice it to say, that's a big euphemism that will never actually fully happen. Fifth rate hike right here. I mean, look at how these rate hikes have corresponded with major lows in gold. Yet every time we see this, we see people get washed out of this market. We see the weakness before the rate hike. People give up, they sell, boom, rate hike, strong move higher. And here we see the last rate hike from today. Now, mind you, these charts do not update to include the close after the Fed rate hike because stockcharts.com uses a system which only includes the futures market, which closes by 2 p.m. when the meeting was. So, of course, we know gold was higher into the 1330s today. It looks to me like we will be setting up for another significant low here in the gold price when on a Fed rate hike. So what can we say about the broad stroke technical analysis that's happening in gold right now? We have a very clear horizontal resistance zone here in the mid to upper 1300s and a very clear trend of rising lows. Very clear to see here on the gold chart. What is this called in technical analysis? This is the definition of an ascending triangle formation. It is a triangle that is ascending in its lower slope, as opposed to a symmetrical or a descending triangle. So we have to take this as a bullish pattern until proven otherwise. And we are looking, for example, in the premium service, we were looking at a leading signal that caused us, despite the negative price action that we were seeing in silver last year, the leading signal told us not to sell yet. And let's check the action at this rate hike here. How did things look today for the price of gold and silver? Boom, there we are again. I don't know if I should say thank you to the Federal Reserve or what, but every time they hike interest rates, let's call it 5 out of 6 times now since 2015, we are seeing these kinds of moves. Let's look over at silver. This is a critical move in silver. Silver was threatening to break down, threatening to form a pattern which would have alerted me that something is wrong with the thesis of rising precious metals. Over the short run, over today, this is very encouraging toward trying to negate that, but I'm not willing to call it that until the end of the week. And the premium update that goes out this weekend will be looking at the follow-through action here, especially in silver, and we will be making a call. How does this look? Is a precious metals bull market on our hands, or are we seeing one of those false rallies that is going to lead to lower lows? We're going to be looking at the best preponderance of evidence that we can form based on available data. So the premium service, as I mentioned, does go out weekly. This coming week is the special members-only video. It will be like this, but it will be a lot longer, about an hour, sometimes an hour 15 minutes in length. We'll be covering everything from gold to silver, the GDX, the individual miners that we are owning here, as well as the buy and sell signals that we're using. Big update coming out this weekend. And finally, if you are new to the precious metals, just know that I do work with individuals on a one-on-one basis by voice, by email, by Skype. If you would like a researched independent perspective from someone who does not sell the metals, I simply look out for the best interest of my subscribers. So, huge meeting today. The Fed, just think about this in the broad stroke of history. The Fed has changed This is only over the last several years. The Fed has changed its official wording of its policy to a 2% inflation rate and saying we would not be comfortable with inflation falling below that rate. We saw that chart. We saw inflation in the United States for the first 150 or so years of this country, all those major technological advances that happened in a period of low inflation. So this idea that there must be high inflation in order for there to be, or even any level of inflation, for there to be a level of prosperity is completely false. It's completely fabricated by the central banks. And just never forget, the central banks work primarily for the benefit of their own member banks. Secondarily, they look to maintain an overall level of price stability or low unemployment. But the primary motive for the central banks is always to look out for the best interest of their member banks, whether it is through printing money to give to them in bailouts or funding perpetual wars we have seen in this country since the end of World War II, through Korea, through Vietnam, and through the present. I do thank you for looking in. This is not all doom and gloom here. I believe we will thrive as a species, you and I and all of us collectively. We just have to keep our eyes open because there's a lot of misinformation out there, and that is the point of this channel, to bring you what is happening in the clearest form.